Welcome to another day, another episode of Real Estate Talk with Willie Lambright, the most informative real estate talk show in the country. Find us at willielambright.com. That's Willie with an IE, Lambright.com. Coming up right now, we've got Joe Mastriano. He's a CPA talking about taxes with Willie Lambright, your host.
Yeah, thank you so much. I'll tell you, friend, we are honored that you join us here each day from 9 to 11. You want to stick around in these 2 hours. We're going to talk a little bit from the perspective of an investor. If you're thinking about buying investment property, what can you deduct? What can you save? Why should you buy investment property? We'll talk a little bit with Mr. Joe Mastriano. That being said, Joe, are you on the line?
I'm right here.
How's it going, Joe?
Oh, good. You know, the more I look at this, I realize that, you know, at a time when the IRS is trying to take away deductions from people, even when you have the receipts, you shouldn't be giving them your money by, you know, making mistakes in your real estate investment. So,
well, I tell you, and correct me if I'm wrong, Joe, Uncle Sam, and I'll just leave it at that, Uncle Sam, in the fine print out there, and you tell me the details of this, but in the fine print, it is, I believe investment real estate is designed to where you get maximum write-offs. You just got to know what you're doing.
And absolutely. Real estate provides more tax benefits than almost any other investment.
Mm-hmm. Can you get specific about it, brother?
Oh, absolutely.
Let her rip, potato chip.
Yeah, okay. So, like, the most basic stuff that people can deduct, interest. You know, you buy the property, you rent it out, so you get to take the interest on the loan. You get to depreciate the cost of it, which I'll go into more later.
Let me back you up real quick, Joe. So when you say to my listener, you deduct the interest on the loan, exactly. Let me explain. You're going to get, and I'll just use an even number, $500 payment, right?
Okay.
If you're on a 30-year, 20-year, 15-year, whatever the case is, it's a sliding scale on that payment as to how much goes to principal and how much goes to interest. Are you saying the interest in that payment is a write-off?
Correct. And under a 30-year loan, if you do that, the vast majority of that payment is interest.
That is sweet. So you write it off dollar for dollar, 100%?
Dollar for dollar.
Sweet.
Well, I mean, it's not a dollar-for-dollar tax credit, but you write off all the dollars. Yeah.
I got you. I'm sorry to interrupt. How rude of me. Keep going.
No, that's fine. Okay, repairs. In fact, a lot of people, because I want to give you some of the benefits that people mess up, even tax preparers that don't understand real estate. You know, your travel back and forth to the property, even if it's long distance. If you own property and you've got to travel overnight, you know, to find out what the tenants broke or, you know, what the problem is, all that trip cost is deductible as well.
What about, so the repairs are also, you know, we're getting ready to come into the season, if you will, and we'll go from, you know, 20-degree weather to 107 degrees weather, and my tenant calls me and the air conditioner went out because the coil is bad. I go out there, I drive 2 hours to get to the property. I have to, because I don't get up late, I always get up early, so I get a hotel. I can write all that off, and then I can write the cost of that repair off on that rental property, correct?
That's correct.
Wow.
That's correct. You know, let me tell you what people miss. So most of the deductions are pretty much anything connected with the property, the insurance you pay, too. I mean, because renting real estate is a business. Mm-hmm. And so as a business, your business expenses are deductible, including legal and professional services, anything strictly related to that business. I'll tell you what people go wrong, though, especially some accountants.
Don't tell me that just yet. I got to go to break. When we come back, we'll visit more with my buddy Joe and tell you why investment property is a good thing when it comes to Uncle Sam. We'll be back in the patented, famous, unbelievable Willie Scotia.
Welcome back to Real Estate Talk with Willie Lambright. It is the most informative real estate talk show in the country. Now back to Willie with his guest, Joe Mastriano.
Hey, Joe, it's Willie.
Here's the deal. The IRS targets people, you know, in individual tax returns, Schedule C's, Schedule E's, that people have real estate investments on. and we help people not get audited. Actually, if you go to my website, if you Google Killer IRS, you'll get that information. And here's what people do, even accountants, to try to, they're scared of the IRS, and they try to, do you out of your deductions rather than document it. And when you buy real estate, you have a closing statement. The residential property has to be depreciated over 27 and a half years. But if you break out the furnishings, if there's any desks or office equipment, it's 7 years. Stoves, refrigerators, appliances. So if it comes with things like that, that's over 5 years. People make mistakes. They just put the sales price down for depreciation. And actually, you have to break out the land because land is not depreciable. And the IRS knows a lot of people mess these things up, so they think they're going to find money. Not my returns, but on a lot of returns they audit. Okay. And then, another thing, people take office and home. I got to tell you that people don't realize they're converting. When you depreciate your home as an office, you're converting it to business property. And when you sell that property, people think, oh, I sold it, there's no tax on the gain. Well, you do pay tax on the gain on that property that you depreciated because you turned it into business property. That 1/5 of your house or whatever is no longer a personal residence in the eyes of the IRS.
I got you.
So they want, So when you sell a house and they audit you, people rub their hands and say, oh well, it's personal. No tax. I'm going to go to the audit myself, and then they get slammed because of that business property. And then they look at other stuff, and I have a 4-part program not to be audited. Anyone that used it wasn't audited. And a lot of it, the key has to do with documenting everything on the return. In real estate and Schedule Cs, I have some people that own property as a business that aren't just renting it out, so they use the Schedule C. And people incorrectly use the wrong form, too, sometimes. But it's important. There's so many costs from the closing statement, too. Abstract fees, legal fees, surveys, transfer taxes. People forget that they prepay sometimes, depending on when they buy the property, interest and taxes to the seller. And they just look at their interest and tax bill at the end of the year and deduct it when they can deduct the interest and taxes that were paid through the closing as well.
Interesting.
Yeah.
I tell you what, Joe. I got a lot of cousins that live down in New Iberia, Louisiana, that have kind of an accent like you. But for an accountant, you're all right guy. Huh?
Mine's from Lubbock, Texas.
Lubbock, Texas. Well, I don't normally do this, but I'm impressed with what you do. You don't mind if I give out your cell phone number, do you?
Well, actually, the office number, 713-774-4467.
713-77. Go ahead.
774-4467.
Or you can go to willielambright.com and click on the Willie Recommends button and become a member of our site, and you'll have Joe's information down there. Now, Joe, I got a few minutes before I come to the end of the segment. First thing I want to ask you, brother, will you come back as a repeat offender?
Oh, absolutely.
We can't cover all the stuff up in your brain in two 8-minute segments, right?
No, not at all.
But I'll be hooking up with you afterwards.
Okay.
All said and done, in your opinion, in the eyes of the IRS, real estate is a good investment in today's economy. Yeah or no?
Well, it's always an excellent investment. And now, while a lot of prices on properties are suppressed, I have clients that are, increasing the amount of their holdings now of real estate. If you're willing to put the time into it, because you got to maintain properties, but if you're willing to put the time into it, it's an excellent investment, especially from the standpoint of tax write-offs.
I say this all the time. Real estate is the backbone of our economy and will correct fully our economy in time. I started this show 3 years ago and said that. They said Willie had a screw loose, but apparently I was right. I believe that, and I do shows on this, Joe, that investing in real estate, you make your money on the buy, not the sell of real estate. And if you do it correctly, it far outproduces traditional retirement accounts. And I think you just solidified it in the eyes of the IRS.
Oh, absolutely. I have a client that bought a lot of distressed properties at foreclosure sales, made a fortune. I was so jealous because I was working hard as an accountant, and this guy was making twice the money as me. And like you said, he was making it on the purchase because he's buying houses for like $15,000 and fixing them up and renting it, and then making more money on the sale afterwards.
Sure.
As he kept his taxes to a minimum because of all the write-offs.
Yeah. You know what's going on this year, and I've got to go to break here in just a second, but what's going on in real estate for my listener, again, we are honored that you join us each day here, but there's this thing called appreciation that's going on. Get to know real estate. It's not what you know, it's who you know. You can get the complete team around you by going to willielambright.com. Joe, I'm getting ready to come to break here, and you did say you're going to come back as a repeat offender?
Oh, absolutely. If people will Google Killer IRS, that's my official trademark, they'll get to my site and information.
All right, we'll do it, buddy. Hey, I appreciate you taking time out of your day to join us here on Real Estate Talk, and I'll see you down the line.
Oh, absolutely.